Welcome to Startuprad.io, your podcast and YouTube blog covering the German startup scene with news, interviews, and live events.
Hello and welcome everybody. This is Joe from Startuprad.io, your startup podcast and YouTube blog from Germany. Today is the 7th of September and this is Labor Day in the US. Since this is one of the most important markets for Startuprad.io, we bring you special. This time very specific. We neither have startup news nor do we have a real startup interview, but we're talking about implications for the startups. We are talking about a new proposed law in Germany that will enable securities, talking about bonds, talking about shares, to be put on a blockchain. And we are talking with a very good specialist about that, with Professor Dr. Philipp Sandner, head of the Blockchain Center at Frankfurt School of Management and Finance, a professor there as well as the member of Fintech-Rat, which is the advisory council for fintechs for the German Central Federal Government. Welcome. How you doing?
Hi Joe. It's a pleasure to be here, and hello to everybody.
We may add to our audience that you appeared in Startuprad.io already back in 2017 when there was no blockchain center around, when you've been pitching at blockchain meetup, Ethereum meetup, I do believe, for the blockchain summer school. And we may add that we do have a kind of running gag ever since that I put you in Startuprad.io on an interview. And I'm glad finally, almost 3 years afterwards, we achieved it. Thank you very much.
Thank you. Thank you.
Let's get down to business. May we first tell our audience a little bit about how this is working right now, and then we get into the specifics, right?
Yeah, that makes sense. Okay, to get started, we are talking about blockchain technology in general, and in more specific, we now see that in Germany we have a lawmaker and a government which is trying to push this topic, not at high speed as we see it in Switzerland, but at a quite modest speed. And therefore, we already had good law proposals which are already in force. That's concerning the crypto license, such that banks and asset managers can trade and can hold Bitcoin and other cryptocurrencies. This law is in force since January. And now a new law has been proposed. This is about digital securities. This means, for example, potentially stocks in the future, but on the short term, it would be debt instruments, bonds, and other assets, which could then easily be deployed on a blockchain. Plus, it might change the capital market, because then smaller startups can basically raise money more easily in Germany. And at the same time, the legacy infrastructure is maintained, but also technology transformed towards DLT and blockchain.
Talking about legacy structure, I've been working for 12 years as something like a plumber of the global capital market. So basically in Germany, and in this law, we are only talking about Germany here. That doesn't apply to any other country because it's the lawmaker here in Germany. Right now, if you do have, for example, shares in, let's say, Deutsche Bank, Daimler, or something like this, there is one certificate that says there are shares from number 1 to 1 million. This certificate is very securely, I assume very securely, deposited at Clearstream Banking Frankfurt, which is the central securities deposit for Germany. And they are members of Deutsche Börse. And from there, they have so-called clearing members where they have their accounts. And from there, it goes down to the banks who are not member there. And it goes down to the final customers, because you have to have in mind for everything like equities, like bonds, you have to know who owns those bonds, not from necessarily a perspective of regulation, but very necessarily because you pay dividends and you pay interest and you have to know where to pay them, right?
Absolutely. So this is bound to individuals. This is different than Bitcoin. It's different than cryptocurrencies. It's traditional capital market formats, traditional security regulation. And you're absolutely right. It's not necessarily about anti-money laundering, but more about identification for tax reasons, for payment reasons, and so on. That's exactly the case. And what is now being brought to the blockchain is that you take a debt instrument such as a bond, as it's out there since decades or sometimes hundreds of years. Please note that the first debt instrument in Germany has been created back in the 16th century. So this is really, really a long time ago. And now after 400 years, this is being digitalized. This means you take the existing debt instrument, which is out there, and you basically plug it into a token. And the token is something like a technical thing I will explain later. The token is a technical thing which sits on a blockchain system, on a DLT system, and which basically captures the debt instrument in it. And the best way to explain this comes from Liechtenstein. Liechtenstein is one of the smallest countries we have here in Europe, but they have done a very fascinating blockchain law. They call it Liechtenstein Token Act. It's also now in force since January 1st. And they also, in this law, implemented the so-called token container model. That's how they call it. And that is a very, very good figure to illustrate what's happening here. The token container model says that a token, which is sitting on a blockchain or a DLT system, a token is nothing else than to be framed as a container. And a container, you know it from logistics, a container is something which is empty. It's a hull, right? So it's empty. And the idea is that this token should be seen as a container, and you can package something into this container. And if you're now packaging, for example, securities into this token, then the so-called security token emerges, which can be, for example, a debt instrument, right? So you take the existing law and the existing securities law of debt instruments, amend it a little bit here and there, such that basically a security in form of a debt instrument can be plugged and packaged into a token in form of a container. The token is sitting on a DLT system. It needs to be custodied there. It needs to be technically stored there. It needs to be organized and so on. But this way you can very nicely dissect the technology part, which is the token, and the legal part, that's basically what is plugged inside the container. So in case you are interested in this, it makes very much sense to dig a little bit into the Liechtenstein Token Act. It's available in German and in English, and it's one of the best descriptions out there about where we are standing with regard to blockchain technology in the financial market and where we are heading in the next 5 to 20 years.
I love the depth of your experience, but we may take all our listeners, all our viewers on the ride. So basically, why bonds? Because you have to see, just as an example, in Germany, you have the federal government, you have all the entities of the federal government, and then you have the 16 different states. Then you have the cities in those states. You have other municipalities, other legal entities. Plus you have all the private corporations, and all of them, or most of them, issue bonds. And you cannot issue one bond and then just add to it. You have different maturities, different interest levels, different packaging sizes. There are bonds out there you can trade in a size of 100 euro, and there are bonds out there you can only trade in ticket sizes of 1 million euro. So there's like a gazillion of bonds out there that sometimes don't get any attention, and sometimes they're just issued, they end up in the banking book of a bank, they hold it till maturity, and that's it. But there are other ones that are traded more or less frequently, and there's some you can barely get your hands on. Only downside I personally see, because the certificates of the bonds and the stocks, they used to be very pretty, and admittedly I own a few very old ones of them. So that's the only downside I can see. But let's dig a little bit into the very, very nice but small, as you said, country of Liechtenstein. As you may know, we always poke a little bit fun of it because it's a very small country, nestled in the Alps between Austria and Switzerland. That's it. Back to you. Oh.
Absolutely. Liechtenstein is one of the smallest countries we have here in Europe. The entire country is having 38,000 inhabitants. Yeah, so take Germany, we are 82 million. Take Europe, we are way above 300 million. Take the US, a little bit below 300 million. Take China, more than 1 billion people. See here, Liechtenstein with 38,000 people is very, very, very tiny. But the advantage of this very small size is that they can act very quickly and very agile because they have a small parliament, they have a very efficient government, and if there are good thoughts, for example, for digital finance and for innovative products, then you can quite easily implement it, get it passed through the parliament, get it in force, because actually it sounds like a joke, but it's a fact that everybody knows everybody in this tiny country, such that of course everybody fulfills a role. That's not nepotism what I'm talking about. Everybody fulfills a role, you know, being a trustee, being a bank, being a lawyer, and so on. Everybody fulfills his role, but still people know each other. They can easily talk, they can easily meet, no traveling involved. And that's why, in case such small countries are taking it seriously, they can create very good regulation, which is nicely tuned to suit the country, to suit the businesses. And therefore, at this point of time, we can say that the Liechtenstein Token Act is honestly among the most advanced blockchain frameworks in the entire world. It's absolutely fascinating. And by comparing it, for example, to other countries which are very proactive, say Switzerland, I would say that Liechtenstein is maybe 1 year ahead of Switzerland, yeah? And maybe Liechtenstein is 2 or 3 years ahead of Germany. And maybe even 3, 4, 5 years ahead of most of the European countries. So you see here, fascinatingly, that Liechtenstein is a small country, is really driving this entire ecosystem of blockchain. And why should you care? Because anybody could found a company in Liechtenstein. You do not have to be there. There are companies out there which allow German citizens, European citizens, US citizens, and so on to found a company in Liechtenstein. Via a trustee construction, for example, and then you can leverage the Liechtenstein Token Act even without physically residing there.
Just to add to this, to emphasize how few 83,000 people are, I found a few cities that have a population of 83,000 inhabitants here in Germany, and they are ranging at 294 until 299 in like the order of cities in Germany by population. Something like Ilmenau, Mettmann, Würselen, Niederkassel, Bautzen, Prina, Bitterfeld-Wolfen, and Neu-Isenburg, very close to here. And that's about the size we are talking about here. But as Philipp already said, it's a small country, but it can move much faster.
Absolutely. Maybe I wasn't very clear. The question I said 38,000. So probably it's even smaller than the cities you mentioned. It's like a very tiny German city. It's even smaller, but still it's an entire country. Yeah, that's it. And therefore, for startups in the area of digital finance, for startups in the area of crypto assets and blockchain, it can really make sense to explore the possibilities of the Liechtenstein Token Act just for opportunities which are provided there, but also because in total, setting up a regulatory compliant company in Liechtenstein can in total be much cheaper than doing it in other countries where you then have to spend hundreds of thousands of US dollars or euro to get it on the street, and it takes months. Yeah, in Liechtenstein, you can partly get the same in a couple of weeks at a lower price because the law is ready for this. No legal workarounds needed by fascinating and innovative lawyers.
That is good to know. Let us get a little bit back from Liechtenstein. Admittedly, we are also covering all the German-speaking area here in English, and that was by far the largest coverage of Liechtenstein we ever had. We will have down here, wherever you're seeing or watching this, we'll have down here in the show notes a link to the respective sources, the German laws as well as the ones from Liechtenstein. That said, let us look a little bit into the future. We've been talking about the law, and my understanding is right now you can have existing instruments like debt instruments, especially bonds, convert them with, as you called it, a container into a token, and then you can basically work with it on the blockchain. What would be interesting for me is, first, can you issue, like when the law comes into force, can you issue like complete security token securities, tokenized securities completely on the blockchain without physical representation? And the second question would be for me, who is running this blockchain?
Yeah, good question. So to be precise here, we talk about digital securities, and this needs to be opposed to, let's call it, legacy securities, which are currently in place. And the key point here is that Germany relies on a paper document of a security. So it needs to be a document signed by a notary. It's basically then put in a physical vault by a company. It's basically a paper document, which is the security. And that's very important from a German perspective, because with this, the entire law of things are applying to this document, right? Because it's physical, you can touch it. It's basically the opposite than something which is immaterial or invisible. You need this from a German law systematic perspective to be able to handle a security. Therefore, you need to have it physically touchable, right? That's basically how it was the last hundreds of years. And now, exactly as you suggested, Jörn, now this hundreds of years long tradition is basically changed and digitized, such that a paper document in the future will not be needed anymore. Therefore, you gain a lot of efficiencies and a lot of benefits from not relying on this paper document anymore. We call it in German the so-called Wertpapierurkunde, if this is necessary to know. But as I said, it's a signed paper by a notary. And what is done here from a law perspective is that the law now proposes that this digital thing, which you cannot see and cannot touch anymore, is basically deemed being a paper document to basically create the same systematic of the government of the last hundreds of years. So you take the existing law, digitally transform it by saying that this token, which cannot be seen, which cannot be touched, should be treated like a paper document in the past, even though it's not a paper document. You call it a fiction, what's happening here. That's what's happening, and that's really fascinating, because with this, we see law, which is now out there since decades, and law principles in Europe, which are out there since hundreds of years, now being digitally transformed with the proposal we now have gotten from the Ministry of Finance and the Ministry of Customer Protection and Justice. So that's really fascinating. And from now on, what happens? The law is being discussed. Everybody is basically offered the possibility to comment on this law. This is mainly done by associations and larger financial organizations. Then the lawmaker is taking up this feedback. They might change the draft here and there. And then the legislative procedure starts in the parliament and in our what we call the Bundestag, and then afterwards in the Bundesrat, like the Council of States. And then most probably, this law will come into force in January next year. That's what experts would expect. And of course, the law will change here and there, but the general spirit of this law, basically dematerializing digital securities for the first time in a systematic way in Germany, this will definitely remain the same. And the second question, Jörn, you asked who will actually run this infrastructure. Here, of course, we cannot change the entire capital market overnight. Therefore, most probably, Clearstream, you mentioned earlier, Clearstream is maintaining custody of assets, and this company will, of course, be there in the next years also, because the law says that it's exactly this company, the so-called CSD, the Central Securities Depository, CSD, that this company should also do its business in the next years, because you cannot disrupt and change the entire capital market overnight. But you now have an opening happening here, which means that other companies can also apply for maintaining this register. Yeah, that could be smaller banks. This could be financial departments of industrial companies. It could also be fintech startups, which are then maintaining an alternative register for securities. And if they do so, it's written in the law that most probably blockchain and DLT technology is the best technology to do this. But it's left open whether it should be permissioned systems or public blockchain systems. With public blockchain systems such as Ethereum, we have one issue which is called finality, because Ethereum works on the so-called proof of work mechanism. That's basically where the huge electricity consumption is coming from. And this proof of work mechanism leads to the fact that you never have absolute final finality of transactions. It's more something like a highly probable finality of transactions. And that's exactly the reason why potentially Ethereum might not be able to be used as a technical platform to maintain this alternative register as opposed to the CSD, which is now covering the market. That was a very long sentence.
My question would be, which technologies have like a head start, which are probable? As we said, it's just probabilities. The law may be changed during the process you described, going through the upper and lower house, Bundestag, Bundesrat in Germany. And that said, is there like anything to be seen on the horizon, which technology it may be?
Yes, definitely. So we need to differentiate between so-called permissioned systems. These are very lean system, privately owned, for example, by a consortium. That's the permissioned blockchain systems domain. And we have public blockchain systems. That's the cryptocurrencies, that's Ethereum, that's very slow systems, but very heavy ones, partly with high electricity consumption and so on. So we have to differentiate between permission systems, privately held, and public systems, which are purely decentral, where there is no legal entity behind. And of course, permission systems do make sense to maintain such an alternative register. You could do this potentially with a privately forked Ethereum. That could be something like Quorum, which has been created by JP Morgan. It could be Hyperledger, of course, but in my mind, the best platform at this point of time is probably R3 Corda. That's coming from a large-scale fintech startup in London, which is since years developing a DLT-based or DLT-inspired infrastructure for the capital market of the future. So R3 Corda is probably among the best suited platforms from the perspective of permissioned blockchain systems, right? In case we talk about public blockchain system, that could be a security token running on Ethereum and other platforms. This needs to be sorted out, what exactly the government wants to have here in terms of finality. Do they want to have 100% absolutely bulletproof finality, or is it enough to have an extremely high probable finality, say 99.5%? Is this sufficient maybe? You probably would now intuitively say this needs to be 100% bulletproof, right? But I would disagree here, because Ethereum has now a capitalization of some dozens of billions. Bitcoin has a capitalization of, 200 something billions of US dollars. Why? Because the system works. Even though there is not absolute finality of transactions, only a very, very high probability of finality. So it does work. Nobody stopped Bitcoin, Ethereum, nobody used it, not because there was this finality issue. So it shows that this finality issue, in my personal opinion, is not too much relevant, to be honest, but it's of course an argument of the legacy financial organizations to keep their business in the future. Yeah, and the reverse proof is, in case it would have been a problem, then Ethereum and Bitcoin would not have grown to a size of hundreds of billions US dollars.
Very fascinating, very interesting. I've been doing stuff like this for the past years, but before we totally geek out, we'll provide the listeners and viewers with quite an extensive list of further readings, further links. Let us go a little bit into the perspective. So as you said, likely January 2021. will the draft become law in Germany? And as we said several times, there may be changes until then. And we've already talked about the very nice country of Liechtenstein that do have some very good laws in terms of blockchain. Let us look a little bit into the international perspective. Can you tell a little bit about what is going on in Europe, in the world, and where Germany is like located here? Very fast, very slow mover, somewhere in the middle?
Yeah, of course, that's a fascinating question. We should write an article about this because it really depends on the perspective. You have the, let's call it the extremely innovative legislations. That's, as I said, Liechtenstein and also Switzerland. We have also a couple of Nordic countries, say Lithuania, Estonia, and so on. They are also at the forefront of driving this technology, but these countries are quite small and they are not that important like Switzerland from a financial perspective. That's why they are for front-running this technology, yes, but this impact is rather limited because they are, let's call it lightweights, right? On the other hand side, you have France having created an ICO law some time ago, which in my personal opinion did not lead to much traction in the French market. From Spain, Poland and other countries, there is not too much known, to be honest. Italy is also not developing so quickly, with one exception. There is a banking consortium of, as far as I know, 200 banks, which are now discussing on how to get the euro on a blockchain system, to have the digital euro being programmable. And with this, that's not well known enough. But Italy is really driving this development about the digital euro. It's also driven in Germany, but this is where Italy is really having like a good move. In London and UK, there is also things happening, but of course they are busy with the Brexit, which is distracting them. And then we have Luxembourg, which is one of the world's important funds location, right? But they truly have some issues with blockchain and crypto. That's why, in my personal opinion, Luxembourg is not moving quickly enough. So put this together within Europe, I would argue that number one is Liechtenstein, but it's small. Then comes Switzerland, which is also a quite small country. And then as a larger country, number three is coming Germany. That's fascinating from my perspective. The other European countries are partly behind, with the exceptions of the Baltic countries, of course. But now let's put Europe into perspective with other regions, say China, South Korea, Japan, and also the US. And here we see that Asia is by far the most active countries, not in terms of legislation and regulation, but rather in terms of understanding the business models, founding startups, putting budget there to really help this technology develop. Even though the legal framework is not that innovative as, for example, in Liechtenstein, right? But Asia is here developing absolutely fascinating on all domains, especially crypto assets. And the US is fascinating also. They have excellent startups in the area of crypto trading and crypto custody, say Coinbase, Gemini, and others. But if you are talking about wider business models in the blockchain domain, you know, like industrial manufacturing plus blockchain, data monetization things, identity management, and so on. That's where the US are left behind, and also the regulation in the US is a little bit left behind. But you have, as I said, a couple of absolutely fascinating startups from the crypto area, which are focusing on one domain, that's crypto trading mainly. Now that's the worldwide ecosystem, and with this, Europe is positioned quite well because of these couple of countries. But Asia is, in my mind, faster, has puts more money in this technology, and therefore develops faster, especially also because the government is pushing this. And the US, we know it from the past, they can change extremely quickly if they really want to. So even if they apparently lacking behind a little bit in this domain, they can, in my mind, if they wish, quickly catch up and bypass a couple of European countries, which are at this point of time probably a little bit more advanced here and there in comparison to the US. But, and that's the last point I would like to make with this question, I now read my cell phone here because we have a fascinating month coming up with September 2020, because now it gets really exciting, because the European Commission, which has been silent and slow for quite a while, is now really trying to catch up. So we have, I just read it here, we have a new identity regulation coming up in early September. Then we have the Digital Services Act in Europe, which closes. Then we have an agenda roadmap for AI. Then we have regulation on crypto assets coming. We have digital finance strategy coming. We have a blockchain strategy coming. We have cyber resilience and other things coming. We have a digital education strategy coming, and we have European blockchain pre-commercial procurement, which is coming. So you see here, that was a long list. There are 6 or 7 landmark proposals, frameworks, and strategies coming from the European Commission in Brussels now this September. So therefore, we also see that finally on the European level, on the EU level, also things are moving more quickly.
We may add that for everybody who's not from Europe or who lives in Europe and never cared about this European way of making law. So basically the European Commission does something, then it goes through a long and extensive process with a lot of consultation. It goes into a directive or some type of guidance for the European Union, and then the local governments, like the single countries, turn them into local laws for most of the time. Is that true?
Yes, it's 99% true, with one exception. Sometimes there are, let's call it gaps occurring, where the local government, say in Berlin, in Germany, can do a regulation themselves without having to wait for the European level. That's exactly what's happened, for example, with the digital securities law proposal, and what also happened with regard to the crypto license, which is in force since January. Here, the government kind of found a way to not have to wait for the very slow European Union level, and then still create a law which is now in force, which produced a really positive sentiment for blockchain in entire Germany, and therefore it was kind of worth it to risk being out of sync with the European Union by simply creating this law and not waiting for the European Union. So it was worth it, even though lots of criticism has been mentioned, because people say that Germany should have waited for the European Union, but frankly then maybe Germany would have had to wait for years until something happens.
Now, fascinating. Germany, the innovation leader. Yes.
The innovation leader, yes, but actually only in the area of blockchain at this point of time. If you talk about other domains, say autonomous driving and other IT areas, artificial intelligence and so on, these are all not developing so nicely, but blockchain does, luckily. And I just mentioned the European Union and their proposal for regulation. Just to be very clear here, the EU level regulation is now soon being proposed. But until this is coming in force, we have to wait for, I would guess, 2 to 3 more years. And then the German law was in place already since January. With this, it's a distance of probably 3-point-something years. And Liechtenstein and Switzerland is even more ahead. So the EU implementation of laws in comparison to the Swiss and Liechtenstein implementation of laws is then probably 4 years. Time differential in between.
We may ask a smart-ass remark, I'm sorry about that, we may add that neither Liechtenstein nor Switzerland are officially members of the European Union, so they are not legally tied to implement this into their law, but they actually do adapt a lot of their laws to the European Union, because all the countries around follow one regulation, one basic rule, and it doesn't make sense for them to be very different in this point. So a lot of their regulations, not necessarily the blockchain, but a lot of their regulations is inspired or adapted from the European Union. I once heard it's a similar case for Norway. I once heard that 70% of their laws actually come indirectly from the European Union.
Yeah, exactly. Concerning the data protection scheme, this has been kind of invented by the European Union and is now spreading through the entire world because other countries also try to implement such data protection schemes as we are now having in place in Europe. So indeed, the European Union is very slow because it's so huge and complex. But if it does something, then it does have some impact.
Well, I would just say very great closing words. I assume from all the things we've talked about that you'll be back as an expert in an interview at one point. Not sure when. We have to fit it in our schedules, like publication schedule, your busy schedule, and my busy schedule. But I'm sure we can manage. Only thing left for me to say is thank you very much. It was just a pleasure having you here. And everybody who would like to reach out to you, they can find all your personal LinkedIn profile, the Blockchain Center, the Frankfurt School, as well as your personal Medium blog down here in the show notes. Thank you very much, Philipp.
Thank you, Jörn, for interviewing me. Have a nice day.
That's all, folks. Find more news, streams, events, and interviews at www.startuprad.io. Remember, sharing is caring.